6/22, 2013, 8:47 a.m. Pacific Standard Time. It is Saturday. Up above here, I have a weekly chart of the Dow Jones. Below us, we have a weekly chart of the weekly Dow Industrial, oh, what we call it, the transports. Let's make sure I have the transports in here. The transports are on top right here, and the Dow is below us here. So one thing about the Dow transports, as far as bull rallies and bears go, is the transports are always one that leads rallies. Um, you can take a look over here at the lower end where the transports had broke higher. They were leading that rally. You can see in the very same chart down here that's in the video is how the Dow go hand in hand with the transports. One of the things that's disturbing about the transports always have a tell to tell. They have a story here with them. They lead rallies up, but they also show us that they're undercutting the 10-week and the 20-week moving average. They're at their major level of support of that 6110 area. Unlike the very same chart over here in the Dow Industrial Averages is where we got that 14.7. So this was the amount of Dow points that we lost last week. The high end of this weekly bar on the Dow was 15,340. Part of it was FOMC meeting and volatility that we said was here to stay throughout the calendar period of the summer. The volatility will remain through this summer period. We very well are aware of it because we forecasted it back when it started in 5/22 of 2013. And that most of this volatility, that if you take a look at the highs here, the Dow is oversold in the short term for the bull, 15,340, and the low of that bar is 14,688. You do the math. This was the worst week of calendar 2013 as far as the bear volatility goes, came back into play, and the bull just got killed. A lot of that is due to complacency, could be greed, lack of fear, lack of risk management. Who knows what they go through? We know what they go through, things that we don't promote that they do. So the thing about it is the transports is showing us here that this Dow really doesn't have any major catalyst support until we get down here. This is where the weekly consolidation. So be about 14,430. Just a little bit lower. It'll be right across here where that gap up started. The transports, if they continue to go lower, their next major catalyst support level, where 6110 support 2 is going to be right here at 6,000. But let me tell you something. We have a quarterly rebalancing act coming up through the next 5-day period starting Monday. So one of the things that we'll be watching carefully, how does this transports get back above their 20-week? But we're going to be ranges in both. This one is telling the story, the Dow transports. That's the index there. The Dow in itself, as we can clearly see here, has broken down from its all-time highs. When we look at it on a daily level, we can see that the 100-day moving average did not get tested, but we can see that this is a double bottom setting up at 14.7. That means that if we dip down and we test it and it doesn't hold, the next catalyst is going to be 14,646 at the 100-day simple moving average. These are daily simple moving averages that a lot of people take a look at. I can tell you right now, though, that any move from back up to the 20-day simple moving average right above 15 is going to be the major wall of resistance. You can see that the daily moving averages are not bull on dailies. They're not going up. They're not going up in value. No, they have turned. So basically, there's going to be a rebalancing act on the S&P 500. We're at crucial level of 14.7. If we do come down In our MMT platform, we'll use our mathematical system to get half of these weekly bars in our other system as far as what those support levels would mean, the application that we use. So basically, this is a major sell off in the market, and it was long overdue. We still haven't got 10%. Now, just let me tell everybody here and everyone that listens in our trader network around the world is that we do need that 10% washout. And where does the 10% start? Well, you could say you could take it from the high and start your 10% correction on down. It would be the first time in my whole career of over 30 years that I would not see a 10% correction from an extreme overbought bull. That now look at the selling, and some of that bull sentiment that started the year out is starting to change its course. There's lots of other factors involved in it. We're not going to go through that right now. That's in our economic section, where people think that things could change. So it's the first time out of 13 years that we've gotten a great bull run. And there is a new bull that has been born, but it's in its infancy stages. We have always told everyone in calendar 2013 that this has been a profitless rally. That 2% growth doesn't cut it. Not only that, in the last quarterly earnings in Dow components, they've been cooking the books. That's a different story. That's on an earnings story, how they cook the books and whatnot, make it look well. In the July earnings quarter coming up, oh boy, it's going to be really something as to what those earnings are going to be like, because the earnings have been good since 2009. When we started the bottom and the stimuluses came in, and QE3 getting tapered down and everything with the Fed and all the volatility that created it. Nonetheless, a break below 14.7, we go lower. But just remember, every bull rally has to have a shakeout. Then we're going to take a look and see where that new money off the sideline wants to come in. And buying at support and selling at short-term resistance is the key to success here. That long-term buy and hold that everyone is in, and I'm buying the mentality, I'm going to buy every single dip. Well, no, they didn't buy the dip at the 10-week. They bought every dip before. Either it started at the rising 10-week in the Dow. They bought the dip and undercut it, got it above it. They tested it, got up above it. This time it blew and sold right down to its key 20-week at 14,688. The 10-week is 15,024. Oh, let us not forget, we're not even going to think about the 200-week on here, but the 100-week is 1,300 on the Dow. We're not saying that's way down here. So this is a major 50-week moving average at 13,819. Whether we go there or not, that would be quite a haircut for the bull. If we get back down in these territories, then we're getting back in bear territory, not bull rally territory no more. So that means that if the bull only lasted so long, we're going to find out. Because if we break below these key weekly 20-week moving average next week with the quarter ended. Now, generally when a quarter ends and you've had that first good pullback and 2 days of selling where you're oversold in these indexes, that's where they would try to buy these dips and leverage back up in certain leadership stocks that we're going to cover today outside of these major indexes. This is the update on the Dow Jones Industrial Average, and in the very same video, it is a major update on the Dow Transportation, and they need to be looked at because you don't want to see the Dow Transports lead bear rallies and they lead bulls, believe me. Then the semiconductors come in after that and various other components, but this is the major one right here.